Today I want to share the top stocks that I am buying right now in 2018. These are the stocks that I am actively buying in my dividend stock portfolio. I am adding to them in 2018, and there's actually 10 different stocks that I want to share with you today. Within just the last 3 months approximately alone, I have made purchase orders in 10 different stocks, and some of these more than one time. And so I'm going to break this down by strategic theme. I'm going to break this down by the specific dividend stocks that I'm buying right now. So get ready. It's going to be a really exciting video today. So welcome to the video, everyone. I am so happy to have you here today. I oftentimes get this question. This is a subscriber question. Ian, what stocks are you buying right now in 2018? And if you've subscribed to my channel, you've been watching me for a long time, you've probably picked up here and there the stocks that I'm focused on, the types of stocks that I'm buying, but I haven't really put it all in one place. So the purpose of today's video is to put it all in one place and also share some insights that I've not shared before on my channel. So please hang in there. I think you're really going to enjoy the video today. So before I get into the specific stocks, I want to talk about the strategic themes. The way that I personally think about buying stocks, about adding stocks to my dividend growth portfolio, it really spans 3 strategic pillars. The first pillar are actually the strategic positions that I outline at the beginning of the year. So if you've been watching me for a while, and I'll link in the description below, you know that at the beginning of 2018, I set forth that I wanted to focus on Kimberly-Clark and Procter Gamble. And the reason that I wanted to focus on those stocks strategically this year is because I see them on sale. I believe right now that the overall media, the overall world, thinks that these consumer non-cyclical stocks are going away, that they're not going to be there in the long term, and they are priced at bargain basement prices right now. And so I set forth at the beginning of this year that, hey, Ian, I want to add to these positions. I want to add to my Procter Gamble and Kimberly-Clark. And the reason that I want to do that is they're core positions in my portfolio. So core positions I always love adding to. I always like making them bigger. And I love the starting yield. And so that's this first bucket of the 3 buckets that I'm going to talk about today. That's the first. And you can see right here, Procter Gamble, Kimberly-Clark. Now, the reason I like these so much right now is Procter Gamble is trading at a 3.71% starting yield. So that is the dividend yield I get right away before they even increase the dividend at all. Just buying that stock right now, I'm entering at this attractive yield. This is one of the better starting yields I've ever seen on this stock. Even better, Kimberly-Clark is coming in at a 3.99. It's almost there at 4%. Just amazing starting yield. I don't even have to wait for dividend increases. I get them right away. And so those are my first 2 stocks. They're strategic stocks. I'm focused on them, laser focused on them this year, because that is what I set forth to do at the beginning of the year. And the reason each year, at the beginning of each year, I set forth some strategic themes is to keep myself focused. I own a portfolio of 37 stocks. It's very easy. Very, very easy to get distracted. And sometimes I get distracted. I want to buy this one or that one. The reason I set these strategic themes is I know, okay, Ian, don't get distracted. Keep it focused. Keep it focused on those strategic themes. And that is precisely why I start with Procter Gamble and Kimberly-Clark. Now, if you remember from that video, and I'll link again in the description below, when I set forth at the beginning of this year, I had 2 stocks that I listed, Procter Gamble and Kimberly-Clark, but I had a placeholder for a 3rd position. There was a placeholder there, and the reason I had a placeholder is at the time, I didn't really see anything else that I wanted to make strategic for this year, because a strategic stock has to be on sale, and it has to be something I really want to buy and focus throughout the year, and I just didn't have one at the time. But subsequently, my number 2 favorite stock of all time, Pepsi, dipped. It just dipped quite a bit, and the starting yield on Pepsi right now is 3.46%. It started actually coming back up. It started improving the share price. I hope it actually stays lower for a while, because I want to buy. I want to continue to buy at these bargain basement prices. I don't want it to go up too quickly, but I added Pepsi as my 3rd strategic stock for the year. Again, at the beginning I had 2. I didn't know what the 3rd would be. Pepsi emerged as the 3rd because it's just natural, given that it had corrected in price, given that the value is there. It's a core stock of mine. It became a strategic theme. And so One takeaway from today's video, obviously we're already in June now, but it's not too late. Do you have any strategic themes for the year, for 2018? What do you want your strategic theme to be? Do you want it to be about growth stocks? Do you want it to be about dividend growth stocks? Consumer non-cyclicals like myself? What do you want your strategic theme to be? Do you want it to be just maybe even to start a portfolio and add to a few positions? In my opinion, everyone needs a strategic theme. Everyone needs that because it keeps them grounded, it keeps them focused. And so again, my strategic theme really spans these stocks that I perceive to be on sale. They have great starting yields, they're core to my portfolio, and they're consumer non-cyclical. So I'll give you an example here. This is the Swiffer Sweeper right here. This is a product of Procter Gamble. I'm sure many of you out there are familiar with this product. I don't know what I would do without this product, to be honest. It is so helpful for anyone out there that has wood floors or tile floors, sweeping up the dust, keeping the house clean and dust-free. This is so much easier, in my opinion, than any other alternative I have ever seen or experienced. And so this is a product from Procter & Gamble that I am constantly using. Our family is constantly using. This is a brilliant product. And there are obviously other products from Procter & Gamble in our household that we use regularly. I'll give you some examples. One of the best examples is Crest Toothpaste. Procter & Gamble makes the Crest brand of toothpaste, which is just a massive pillar within many American households. It's a very popular brand. I'll give you another example. Procter & Gamble owns Gillette. Gillette's brand of razors, shaving creams, and related items. And so these are all products that people need on a day-by-day basis to live. They are not going anywhere, in my opinion. Sure, there's going to be disruptors that come in and try to displace them, but ultimately what will happen is if a disruptor gets too aggressive, Procter & Gamble will just buy them. Or, quite frankly, I view Procter & Gamble as being the displacer because Procter & Gamble is always innovating and they're always trying to come up with new and creative solutions. And so certainly I love buying these types of stocks on sale because I don't think consumer non-cyclical, I don't think it's dead. I don't think it's going anywhere. I did a whole video on this below. I'm going to link to it below. Check that out. But I love consumer non-cyclical, and when these stocks go on sale, I am always focused on buying them. I'll give you another insight here. One of the reasons these strategic pillars, these strategic themes, in my opinion, are on sale so much in 2018 is the interest rates are starting to rise. And with rising interest rates, many investors are kind of looking at short-term solutions. And they're thinking, hey, in the short term, should I put my money in bonds or should I put it in dividend paying stocks? And the shorter term yields on bonds right now, they're actually quite attractive. But the problem with bonds, in my opinion, is they are taxed as ordinary income, whereas qualified dividends from a company like these three come in as long-term capital gains. But also the bond rates fluctuate, interest rates fluctuate. Dividend stocks like Procter & Gamble, Kimberly-Clark, Pepsi, they have very long-term track records of increasing dividends like clockwork year over year over year. And so it's not even about this 3.71% starting yield on Procter & Gamble or the 3.99 on Kimberly-Clark. What it's about is what's that yield going to be on my cost 20 or 30 years from now. It's going, in my opinion, to be substantially higher than anything I will ever see from a bond, unless it's some really low-grade junk bond that is very, very risky. And so I think a lot of investors right now are kind of short-sighted, and I think some of them have to be because we're talking about institutions, institutional money, pension funds, and they're thinking like, hey, short-term, what should we do? Should we buy the dividend stocks for the income? And they certainly have some risk with them because we're buying common stock. Or should we buy bonds, which are maybe a little less risky and have a similar yield? A lot of people are starting to look at bonds. And I think this short-term mentality is great for people like me because I love to buy these stocks on sale. I love a good sale, and I look forward to a good sale, and that's exactly what's happening in consumer non-cyclical right now. So that's pillar one, strategic themes. Think about it. What are your strategic themes? So pillar number 2 for me this year is stocks I'm bringing to size. So in my portfolio of 37 stocks, I have core stocks, medium, and small. And I classify my stocks that way. They all play a role on the team. But I always look at my portfolio-wide, and I try to understand, are there certain stocks in my portfolio right now that just aren't at the right size? They're just not there. And I'll link again in the description below. There's going to be a lot of videos I link to today because a lot of what I'm talking about here, I'm referencing other things that I've discussed in the past. So I'm going to link to a video about my portfolio composition. You can learn more about small, medium, large, what that means to me. But basically, these are all stocks I am bringing to size. I'll explain this through example. General Mills. Boy, I love this company right now. I'm going to link in the description below about a video I did on General Mills. This is the company that makes Cheerios and many other cereals. They make many products. They own, for example, the Annie's brand as well, of those bunny crackers, of the macaroni and cheese. They own a whole suite of consumer non-cyclical products that all of us need to eat every single day, and they're in American households. Great, healthy products like these Cheerios. And so with General Mills, they have been falling on some difficult times in 2018. I'm not going to go into all the details, but I will link in the description below to my General Mills review. I think it will take some time for General Mills to work everything out. I love it when this happens. I love these kinds of opportunities because a short-term, look, a stock typically doesn't go on sale without any reason. When a stock goes down, there's always something happening. Either it's internal at the company or it's just market perception, like, hey, consumer non-cyclical has no future. Or it could be a combination of the two. It could be all kinds of things. But the reason General Mills is down right now is the company is facing some challenges. And a lot of it is just on the cost of raw goods, the raw goods to make these Cheerios, to ship the Cheerios to the stores or directly to consumer through platforms like Amazon. There's a lot of costs that are being incurred. Anyways, they're also doing a major acquisition right now, a pet food company acquisition as well. Anyways, this has created an amazing opportunity. The starting yield right now in General Mills is 4.31%. World-class consumer non-cyclical brand. How often is it that one can achieve 4.31 off the bat? No dividend increases yet. This is just the starting yield. It is fantastic. It makes me so excited. And so this is a stock, though, I just started buying it. It's less than 1% of my portfolio. I have a rule, and one of my rules is no stock should be less than 1%. If it's less than 1%, it's insignificant. And so I'm adding to General Mills regularly. I'm buying it regularly each month now so that I can bring it to size. I can get it above that 1%. Now, General Mills, I don't know if it's going to end up, definitely I don't see it being a core stock in my portfolio. Will it be a small stock or medium? I probably think it will be in the small bucket. And so for me, once it kind of gets to that 1%, maybe I build it up to 1.5%. And I'm talking about percentage of my overall portfolio dollar amount. How many dollars do I want in General Mills? I want about 1% to 1.5% of all my dollars in General Mills. And so I got to get it there because it's below 1% now. But I don't think I'm going to build it much beyond that. I don't just see it as a really big stock in my portfolio. So I need to know where I'm at now. I need to know where I'm going, and I have to get myself there. And that's exactly what this bucket is all about. It's stocks I am bringing to size. And I'll tell you, why didn't I just put all my money in General Mills right away? Why didn't I just buy my 1 or 1.5% to begin with? Whenever I add a new position to my portfolio that I'm not familiar with, this is one that I first started buying in 2018. I never owned it before. The stock needs to build some rapport with me. I need to build trust with the company. I can't just commit all in to a company and put a lot of money in it before I have some experience just owning it for a while. And so I always like to start small with a new position, and that's exactly what's happening here at General Mills. And I have another example of a position like that later. We'll talk about that in a minute. It's actually in the third bucket, but that's how I'm thinking about General Mills. And so on this bucket, I'm going to keep going through some more examples, but the takeaway here is in your portfolio, or just thinking about your portfolio, are there any stocks in there that just might be at the wrong size? Maybe they're way too small. Maybe they're too big. Usually for me, if a stock is too big in my portfolio, I never sell. Rarely, I shouldn't say never. There's an example of selling Dr. Pepper Snapple earlier this year because I had to, because the company is going away as we know it now. And I was really happy about that. Well, bittersweet. I was happy that I got the ability to redistribute the money, and I feel good about how I redistributed the money. Sad in the case that I didn't want things to change with Dr. Pepper Snapple. But anyways, when a Usually speaking, I do not sell a position. It is very rare. And so what do I do if a position is too big in my portfolio? I've had this happen before. What I do is I typically stop reinvesting dividends. I will then take the dividends from that company to buy other companies. More or less, I generally like to reinvest in the company that paid the dividend. These days, at least, my strategy has changed over times. But when a stock has gotten too big, it's bigger than I want it to be, then I will selectively reinvest the dividends. I won't reinvest them in the company that paid the dividends. But generally speaking, think about it. Are there positions in your portfolio that are either too big or too small? Where do you want them to be? Write it down, journal it out. Think about strategically the composition of your portfolio. This is something I do on a regular basis, and it has really helped me out. So just a thought there. Moving on, McDonald's. You're going to remember, if you've been on my channel for a while, that McDonald's is my number 3 favorite stock of all time. I love this company. I'm going to link in the description below to that video. This is an interesting one. I wasn't actually buying McDonald's actively before I did that video, and the reason I wasn't actively doing that is because it's gone up a lot. And I have seen some really good capital appreciation on that stock. It's done really well for me, and quite frankly, it's fairly valued right now, if not overvalued. That being said, when I did that video, something triggered in my mind. Ian, this is your number 3 stock of all time, and it's not at the right size. Right now, McDonald's stands at about 5.1% of my portfolio. I would like to see it a little bit bigger. I'd like to see it up probably more at like 7%. And so this got me thinking. It got me thinking that I need to bring this to the right size, and I need to bring it there because it's a core stock, and not only a core stock, a number 3 favorite stock in the entire portfolio. I need to get it up there to 6-7% range of my total portfolio dollar amount. I need that amount in McDonald's. And so I started thinking, I'm going to start adding to this thing, and I'm going to do it consciously, even at fair valuations, because it's just got to get there. It is so core to what my portfolio is and where it's going. And so that's what I'm doing with McDonald's right now. And Pepsi, by the way, this one falls in 2 buckets. So it's not only a strategic pillar this year, but it's also a stock that I'm right sizing. I'm bringing it up to size. Right now, Pepsi is at 4.4% of my portfolio, approximately. This is my number 2 favorite stock of all time. Having my number 2 favorite stock of all time sitting at 4.4% of the portfolio, that is just not where it needs to be. It needs to be up at 6 or 7% at least. And so I need to get it there. How am I going to get it there? I'm going to keep buying. Now, thankfully, unlike McDonald's, I'm not buying Pepsi, in my opinion, at fair valuations. I'm buying it at a discount. It's trading at a reasonably good valuation, in my opinion, now. So it falls in this strategic theme bucket more than it does in this bucket. And I like that. I like that about Pepsi. And so one other one, United Technologies, I'm going to link in the description below about my recent review of that. You're going to like this one. United Technologies is my number 4 favorite stock of all time. Number 4, it's fairly valued now. It was on sale a little bit back in 2015, but more or less it's fairly valued now. I love this company because it brings diversity to my portfolio. You've seen a lot of themes here so far. You've seen a lot of themes, and a lot of these themes are around consumer non-cyclical. Well, I like United Tech because they're a industrial company. They make elevators, they make jet engines, they make aerospace equipment, they make escalators, and so they're doing all this industrial stuff. It brings great diversity to my portfolio, but you know what? It's only at 2.4%. 2.4% of my portfolio is in my number 4 stock of all time. Doesn't make sense. I need to get that up probably to around 5 or 6% of the portfolio, somewhere in there. And so anyways, I got some work to do here, and yes, it's fairly valued, but I'm going to add to it because I need to bring it to size. And so this is bucket 2. Bucket 1, strategic themes. Bucket 2, getting companies in line with where they need to go. And certainly bucket 2, I won't just bring things in line usually if they're not at a reasonable valuation. So General Mills, great valuation right now. Pepsi, great valuation. McDonald's and United Tech, they're not at great valuations, but I'm talking here about my number 3 and number 4 favorite stocks of all time. If they are that high on my list, they are that core to what I'm doing, I gotta bring them to size. And so that's what's going on there. So anyways, let's move on here. 3rd bucket. I like to buy stocks that are on sale. So I'm talking here in the 3rd bucket about special opportunities. These are special opportunities that have presented themselves that just come up from time to time. I love it when this happens. I love when a stock goes on sale. And so first one, Southern Company. Boy, if you've been following my channel, you know I love Southern Company. I'll link in the description below. I'm going to be linking to so many videos today. This is a utility. I love having utilities because they provide diversification. Again, gets me a little diversified from all the consumer non-cyclical I have. And I love consumer non-cyclical, but I have to have some diversification. Anyways, Southern Company is yielding 5.15% right now, starting yield. This company has a history of raising the dividend over time. In fact, over the long run, based on their annual report, they have beaten the major indices like the S&P 500. And we're talking about a regulated electric utility here. That is amazing. And so anyways, I've been adding to this company this year just because it's on sale. And why is it on sale? Interest rates. Interest rates are up. Utility stocks are down because people who are really focused on short-term income have other alternatives now. They don't just have to buy dividend stocks, they can buy bonds as well. And so we're talking about pension funds, money managers. They're starting to have options, and it gives investors like myself who have a long-term approach great value. And so that's special opportunity number one. Special opportunity number two, oh boy, 3M. So this is the company that makes Scotch tape. This is the company that makes these Scotch-Brite sponges, and these are used for cleaning dishes. These are really wonderful, these sponges. And they make a whole bunch of products, both for consumers and also for companies, for B2B as well. And this is a company been around a long time. It's never really on sale. It's always trading at very high valuations because they're growing very quickly. Not only growing the dividend, but growing their revenues, growing their earnings. This is a growth company. I actually added this company to my portfolio for the first time in 2018. I did this because it corrected. It had a massive correction earlier this year, and I was like, Ian, you know what? I'm just going to go for it. I'm finally going to add this thing to my portfolio. I should have done this 10 years ago, 15 years ago, but I'm finally going to do it. And for a while, actually, I had postponed buying this company for so long, I didn't know if I was ever going to do it. I was kind of upset that I didn't buy it 10, 15, 20 years ago, but you know what? It's never too late. It's never too late. And finally, I had a special opportunity. I wouldn't say it's a great valuation by any stretch of the imagination, but it's rare that this one goes on sale at all. I saw a nice correction. I decided to go out and start my position. Now, this one I actually did a little different than General Mills. I kind of just took a lump sum in it. And the reason I did that actually is I had an opportunity to do that just based on selling my Dr. Pepper Snapple earlier this year, a kind of wacky one-time event. But anyways, I had that opportunity, so I just went for it. And I feel so confident about this stock for the long run. And I don't think I got a great buy by any stretch of the imagination. But again, it came down. It's very rare that that happens at all with 3M. And so I was excited to buy this one as a special opportunity. What else? Campbell's Soup. This company is not a big percentage of my portfolio. This is a small company. It will always be a small company. It's in the small bucket. And I don't envision it being a big company in the portfolio. That being said, this thing just tanked. They are facing some challenges now, as a lot of consumer non-cyclicals are facing. They're facing some challenges on the top line. I think one of the areas where they're facing some challenges is they just done so many acquisitions that they're racking up a huge amount of debt. One of the biggest acquisitions is one that closed recently for Snyder's-Lance. This is the company that makes the pretzels and snacks. I love that because the snacks category is really high growth. Anyways, they make obviously the iconic Campbell's Soup. I love these ones, by the way, because they come in this cup where you can just put it in the microwave right off the bat and then drink it. Now, obviously, this has a lot of salt in it, so it's not the kind of thing one would drink every day. But the beauty of Campbell's Soup is if you're a runner or an athlete and you sweat a lot, this is a great way to replace the salt that one needs in their body. And so I love Campbell's Soup for that reason. It's always good after or before a very long run. And so anyways, they make a lot of brands. I've done a whole video on it. I'll link in the description below. I love their Plum Organics brand. This is a brand of products for toddlers and babies really, really good brand of food that they acquired. And some of the comments here on my channel as well have gone through all of the different brands that Campbell's owns, and people have even pointed out, subscribers have pointed out, brands I didn't even know that these guys had. Anyways, they tanked. Starting yield is 3.77%. Not great. I mean, it's pretty good though. But what I like the most is the PE. The forward PE on this company is a 13.4 right now. I look at forward, I rarely actually look at forward PE. I'm doing it a lot recently because backwards PEs are skewed by one-time tax events. There's been a lot of change in the tax law, and so a lot of the PEs are just wacky. They don't make sense because there's been one-time tax events. So anyways, I'm starting to look more at forward PEs, and with Campbell's, it's at a 13.4 for 2018. That's a reasonable PE. That's a fire sale PE in my opinion for a world-class brand like Campbell's Soup. And so how can I not buy Campbell's Soup when it's at a 13.4 forward PE? I think a lot of investors are missing that. I think it's on sale because a lot of people are just looking at the debt. A lot of people are just looking at consumer non-cyclical in general with a lot of negativity right now. And that negativity is just, I love it. It's creating an amazing buying opportunity. And again, I need to put things in perspective. This will never be a core stock of mine. It will never even be a medium stock. This is a smaller stock, but surely I'm going to add to it when a special opportunity arises. And so my last special opportunity, I actually haven't bought any more of this yet, but I'll be doing it shortly, most likely, is Starbucks. Man, this company has gotten some bad PR this year. And in fact, they just tanked. This company just tanked about, I think, 10% in a single day. I cannot tell you the last time I have seen that. I don't think I have ever seen that Starbucks tank. And this is one of the best brands in the entire world. In fact, I was reading something the other day. I think their mobile app. We talk about technology sometimes on my channel and how growth investing versus dividend investing, this or that. Starbucks, in my opinion, is a technology company. Their mobile payment app on the smartphone that people use, like myself, to pay for their beverages and their treats, their snacks at Starbucks, that is one of the largest payment processing apps out there. In fact, I think it might be number one. I don't remember the report. It was a few weeks ago I read it, but that's fantastic. That is just mind-blowing that they have one of the most robust, most impressive mobile payment systems out there of any company, tech or non-tech. And so sometimes investors, they get kind of worried, like, am I a tech investor? Am I a dividend investor? Sometimes it can be both. And I look at Starbucks as a dividend company that's also a tech company. It's also a consumer-facing company, restaurant company, and real estate company, quite frankly. And so Starbucks right now, starting yield is 2.1%. Not huge, but they grow that dividend fast. I'll link in a description below. I did a video on this one. The opportunity for a high yield on cost on Starbucks is truly there because they have a history of growing the dividend fast. Anyways, they're facing a few challenges from a PR standpoint, from a general growth standpoint. I think they're starting to face a little headwinds on growth. They're starting, I think, based on some of the reports I've read overseas, in China, for example, starting to see same-store sales not grow as quickly as they had thought. And they're starting to see stores that are placed too close to each other cannibalize each other's revenue. And so anyways, this company, this is not their first rodeo. This company has been doing this for a long time. They are going to figure it out. They are going to take this to the next level. Starbucks is where people go to have a good time. This is the de facto restaurant, the de facto coffee store globally where people go to take their break. And in modern society, real wage growth has not been there. Real wage growth, in fact, I was watching a report the other day from the 1970s through now, it's not really there. The growth in general has been going to companies, to their top lines, to executives, and also to shareholders, people who own the stocks. This is why I love owning dividend stocks, so the dividend investors get rewarded. But anyways, where are people to go to enjoy some time out of their day, to take a break from their job, to meet up with friends and family, to give themselves a treat? How can they do that in the middle of the day other than going to Starbucks? I love Starbucks for this very reason, that it is just mass appeal to pretty much anyone globally who is looking to take a break. And so anyways, I think they'll rebound. There are a lot of people getting upset about this the other day, that they're closing 150 stores. This company owns thousands of stores worldwide. Of course, they're going to close stores from time to time. There's going to be stores that are not profitable. They're not the right store. Maybe they're just not in a location that Starbucks likes. Maybe they found a better location. And so people getting upset that they closed 150 stores, I think, is just ludicrous. It does not make any sense to me, but I love it. I love this. It's a gift. I'm so thankful that these kind of things happen, that Starbucks can go down 10% in one day. This for me is a medium stock. Could it ever get to core? Maybe. For me, though, it's a solid medium stock, and I love it. And I love the opportunity here to add at these prices. And so a special opportunity came up. Will more special opportunities come up before the end of the year? Maybe. We're only halfway through this. We're only halfway through 2018. And so I certainly think there's going to be more of these special opportunities. More of this will change over time. But right now, these are the 10 stocks that I'm actively buying. And I am focused on actively buying, like literally right now, within the last 3 months of my investing time horizon. So anyways, just a general note, I'm also reinvesting. And so I own 37 stocks. Generally, I reinvest dividends in the company that paid the dividend. I will only selectively not reinvest if a certain company just got too big in my portfolio. I don't want it to be that big. Or for just some general belief that it's way overvalued. It's ridiculously overvalued, and I just don't want to reinvest dividends at that level. Otherwise, I will reinvest. And so, yeah, I'm actively buying 10 stocks, but I'm actively buying most of my stocks right now, most of my 37 stocks. And so that's a different way to look at it as well. So thank you for watching the video. I'd be curious if you've been watching this long, if you're part of the PPC Ian community. What do you think? What are the stocks you're buying this year? How do you think about it? Do you think about it this way, about strategic themes, right sizing, and special opportunities? Do you look at it a different way? How do you look at the stocks that you're buying in your own portfolio? I'd be really curious. And do you think these are reasonable stocks to be buying right now from a dividend standpoint, from an income standpoint? Look, I'm trying to live off of dividends, to pay money, use my dividends to pay bills. Using the money that gets paid from these companies to pay bills. That's my strategy. That's why I'm buying these 10 stocks right now. Do you have a different strategy? How do you look at it? I'd love to know, and I know everyone else here in the thriving PPC Ian community would love to know. Now, before I leave, I do want to please invite you, if you haven't already, to subscribe to my channel, to like the video, to comment. I actually attempt to answer all comments on this channel. It takes a lot of time, but I do it. I enjoy it. And so please leave your comments below. They will not go unnoticed. Before I leave today, I do want to add a full disclosure. I personally own in my stock portfolio the stocks mentioned today. So I am long. I own Procter Gamble, ticker symbol PG, Kimberly-Clark, ticker symbol KMB, PepsiCo, ticker symbol PEP, General Mills, ticker symbol GIS, McDonald's, ticker symbol MCD, United Technologies, ticker symbol UTX, Southern Company, ticker symbol SO, 3M, ticker symbol MMM, Campbell's Soup, ticker symbol CPB, and Starbucks, ticker symbol SBUX. That's a lot of stocks, a lot of disclosure today. I own all of those stocks. Also, in terms of a friendly disclaimer today, I am not a licensed investment advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please do consult a licensed financial advisor first. Thank you. Thank you so much for making it this long in the video. It really means the world to me. So happy to have you here on my dividend investing channel, and I will see you in the next video.